Hi, guys. It's the December 3rd, 2022 meeting of the Money Masters Investment Club. I'm not going to spend a lot of time on a meeting today. Just kind of go through our financials and look at a couple of other slides. So let's kind of get right to it. Itinerary, the normal. We're going to talk a little bit about our financials and a little bit of a market update. As far as the financials go for the week, this is actually a 2-week financials because the holiday last week we didn't do a meeting. Starting NAV on 11/18, 22.93. Ending NAV as of yesterday, 23.84. So that's a 91-cent gain. Comes out to just under a 4% return over the last 2 weeks. So making a little bit of progress, slow as she goes. Let's look a little bit at the treasuries. You can notice the market's in flux right now, guys. Not entirely sure which way it wants to go. The Fed is trying to bring the market down, although Jerome Powell had a meeting last week on Wednesday, and in that meeting he was almost bullish, which is unlike him. So the market was a little bit confused. I was a little bit confused. The market took off on the news. We had some employment numbers came out yesterday. Remember, the employment numbers come out on the first Friday of every month. They came out yesterday. They were good in terms of people looking for jobs and things, but from a point of view of inflation problems, they weren't very good. And the market or the pre-market tanked on the news, although the market blew it off the rest of the day. So a lot of back and forth in the market. The market just really can't make up its mind which way it wants to go simply because there's so many conflicting reports. Now we've got on the 13th and 14th of the month, we've got the Fed meeting. So again, that's still roughly 2 weeks away or so, week and a half. So we've still got some choppiness to expect. I don't have any idea what the Fed's going to do. I think they're going to do a 50 basis points rise on the 13th and 14th, or that's the estimate anyway. They may do more. That would tank the market. If they do less, that would make the market go sky high. And we would probably go into a bull run from there, a big time Santa Claus rally. I think they're going to do the 50 basis points. That seems to be the consensus right now. If it does, I think we get a little bit more of this choppiness that we've been seeing. We have some good days, we have some bad days, but overall, it's really hard to figure out which way the market wants to go. I do think the market is starting to now begin to price in a recession in early 2023. So I do think that there's a limit to the upside. We might make it to the 420 level on the spider, but I don't know that we would go any higher than that. There are some companies, Morgan Stanley and stuff, saying we might get back to the 480 range. I don't see that. Those were pretty close to the highs that we had. I don't see that, but 420 I think is within the realm of possibility. And that's only about 15 points, give or take, from where we're at, and that's 1,500 basis points, by the way, but 15 points from where we're at right now on the S&P. In terms of interest rates, you'll notice have I forgot to put a date up there, but the right-hand column where you see a plus and minus is actually the December 3rd rates. So you can see that the 1-year rate has gone from 4.735 down to 687. So it's been a decrease of just 4.8 basis points. So nothing to write home about there. So you'll notice that on the short end of this, the range here, interest rates aren't doing as much as they are on the top end. The 2-year has bopped down though 22 bips, 22.1 bips. The 3-year Treasury down 27.5, a little more than 27.5 bips. And then the 5-year down 33.9. The 7-year down 33, 32.6 on the 10-year, which is our main one, and then 37.9 on the 30-year bond. So bond rates have come down a lot. You remember it was just a matter of a month ago or so, we were at 4.5% on the 10-year. So now we've come down almost, well, actually a little more than 100 basis points from the high. Again, the market seems to be pricing in some inflation, or I'm sorry, recession numbers early next year. But I would expect the rates to try to start coming back up. The short-term Over the last few months, though, the kind of the low, or what we call support level for the 10-year bond, has been about 3.5. So if it holds this 3.5 here, 3.492, if it holds this here for a while, then we'll probably head back up from here. If it breaks the support, the next support on the 10-year isn't until about 3.12. So the 10-year could fall quite a bit from here. That would make, remember, the stock market and the bond market in general work kind of against each other. So if we start to see the 10-year bond come down to the 3.12 type of thing, we would expect the stock market to really rally from that. So we'll wait and see what happens, but in general, that's what's going on with the interest rate. 6-month T-bill, again, if you're looking for a little better a rate of return from someplace you want to park money, someplace, this is not a bad place to park it. 4.66. There's very little currency, or I'm sorry, risk there in terms of interest rates materially changing over a 6-month period of time. So, and that's a relatively good rate for a 6-month T-bill. Mortgage rates have come down just a tad. I don't remember what they were 2 weeks ago. I think 6.8. So they're at 6.67 today. 15-year mortgage 6.04. So they are trending down a little bit as well. Real estate agents would be happy about that. We are starting to see a little bit of an uptick in real estate sales. So still, it's a high rate on a relative basis, but from a historic basis, it's an okay rate. Let's just call it okay as opposed to a good rate. But that's the mortgage market and the treasury market in a nutshell. The last thing I wanted to show you is that, I forgot one slide here. I thought I was going to get into a different slide. One last thing here. I am going to change the meetings here. I've been trying to do this on Thursdays and Fridays, but I got a lot of paperwork to do for my trading week. I got to document my trades. I have to update my information with the SEC and FINRA and stuff. And it gets a little tough sometimes for me to get all that paperwork and stuff done and then try to do the meeting. So I'm going to start doing the meetings on Saturday. We'll still hold them weekly. But Saturday, give me a little bit more time, like today, it'll give me a little bit more time to make sure I've got the numbers the way I want them and not rushing to do anything. So we can also do a Monday through Friday thing instead of doing Thursday to Thursday. So I'll just get these published on Saturday, and then you can kind of look at them at your will. I've also decided, this came from somebody made a comment, and I think it was a good one. So once a month, we're going to do a live meeting. So instead of doing the meeting that we do the way we're doing them right now, we'll do a live meeting once a month. In that live meeting, we'll do some sort of training. So I've had some people ask about how to, if you got into the market right now. One of the big questions I got just a few days ago, if I get into the market now and it may be too soon, what happens if the market tanks? How do I protect myself? So I thought maybe what we would do is maybe do a class in the next couple of weeks on hedging so that you can protect the position once you take a position, just in case the market wants to kind of let go and go the wrong way for an extended period of time. So we'll show you how to hedge. And then from then on, I think once a month, we'll do some sort of training where we talk, like I said, we'll talk about hedging, or we'll talk about how to do, somebody asked me how to do fundamental analysis about picking stocks and things. So we'll do a little bit of that as well. So I can kind of teach you that over the week or over the coming years as we talk about different things. And of course, if you have any ideas about things you want me to talk about or how to do it, send me an email and we can kind of go through that stuff so that you become a better investor. Having said that, let's look at what I wanted to show you is I've been talking about the choppiness of the market lately and how hard it is to stay in a position depending on what kind of chart you take. And what I wanted to do is I wanted you to see real time, and it's not really real time because the market's closed, but I wanted you to have a better understanding of what the market looks like using different types of charts. Now, you know that I spend most of my time, even after the market closes, every day I spend probably 3 or 4 hours a day just on charts, trying to come up with a chart that works for a market. Now, normally I don't have to spend that much time on charts because the markets are fairly consistent. If the VIX is high, we can go with longer charts, and if the VIX is low, we have to generally go shorter charts. The confusion comes in when the VIX kind of gets in the middle. It's not really high, but it's not really low. And that's where it's at right now, by the way. The VIX is right around 20 right now. I think it hit 19 yesterday. But as the VIX kind of stays in that middle territory, you're torn between long charts and short charts, or even a medium term chart. None of them really give you a good bird's eye view of what the market's going to do, and it makes it hard to make decisions. Because what can happen in these kinds of markets is the charts will tell you to go one direction. For example, maybe you want to go calls, and you go into calls, and the next thing you know, because there's a big candle down, you might be down 40, 50, 60 cents, and then the market comes back. The problem with that is that when we're holding, let's say, 1,000 contracts, to be down 40, 50, 60 cents is to be down $60,000. And I don't like to be underwater by $60,000 because at the end of the day, I have to make a decision about whether is it going to come back, because you never know. You don't know what the market's going to do. Is it going to come back and follow the charts, or are the charts going to break down and come back down with it? And now the next thing I know is I'm down 100 basis points, or $100,000. And then of course, if I'm doing 5,000 contracts, I could be down easily four, five, $600,000 on a single trade, just simply because you get these candles that are just what we call wicked, no pun intended, but they become very large, and it's a little bit, I don't want to say terrifying, but sometimes it is. It's terrifying because you don't know how far you can let this go before it wants to come back, or if in fact it's going to change direction and keep going the wrong way. And now you've got to try to figure out whether just to take the loss or to strangle the trade. And if you strangle the trade, it's hard again because now you have to try to figure out how long to hold which side of the trade, because you don't want to get rid of them both at the same time. You want to get rid of one first, and then the question is, do you get rid of a call first or a put first, or how many calls or puts do you buy to strangle? Do you keep the same number? Do you double down, double the number so you can kind of make up some room? So in any event, I wanted to show you some of the things that we look at on a day-to-day basis. And sometimes when you look at a long chart, you think, man, that was an easy day. If I had just gone through the long chart, it looks like an easy day, but then when you look at a chart that we actually use during the day, it's a mess. So let me show you what I mean by that. This first chart is on Monday. Now Monday, the chart on the left here is a 15-minute chart. So in a 15-minute chart, it looks like a nice, peaceful, calm down day. So it looks like if you had, maybe had bought calls from the opening bell and held them right up until about, let's call it 10:30-ish or so. This is a 15-minute chart, so it updates once every 15 minutes. But you'll notice at about 10:30-ish or so, it turns down and basically stayed down the rest of the day. Now that looks like an easy chart to trade. But if you look at the chart over on the right is a shorter version of this same chart. And what you'll notice is you can't see all of the movements. You'll see that, for example, right around 10:30ish, where you see this thing, where you see nothing on the left-hand chart, starting at 10 o'clock, the right-hand chart's moving up. It moves up from, say, 10 to 10:30. That doesn't even show up on a 15-minute chart. So if you're in a 15-minute chart or in a trade looking at a 15-minute chart, and then you see this thing moving up and you start asking yourself a question, do I hold it? The 15-minute chart isn't changing. So do I hold it, or do I go ahead and take the loss, or do I strangle, or whatever? Because really for what happens here is for about half an hour or so, this thing's going the wrong direction. Can you let this thing go the wrong direction for a while? And that's the struggle we have, guys. So this thing, the left-hand chart is saying stay in the downside. So put most of the day from right around 10:30. But until then, you look on the right-hand side, and it's up and down all the time. And you never really know which one of these things where you see the greens, you never know if they're going to keep going up or they're going to keep coming down. Are they going to go up for 10 minutes and then come down? Are they going to go up for 20 minutes and then come down? You never really know. And remember, if you're in puts, you don't want to see the market going up. That means you're losing money. So at the end of the day, we struggle with this. Do we take the calls? Do we leave the calls alone? Do we strangle? And this is the problem we have. And then if you'll notice on the right-hand side, and remember, the left-hand side chart is saying down all day. The right-hand chart, though, comes in and again, right around 11 o'clock. Now, 11 o'clock, it didn't really do anything. It didn't go up, didn't go down, kind of just went sideways. Now, you will notice that on the 15-minute chart, right around that time, at a little after noon, there was a green candle in there. So you start to see some green candles. And again, even though the 15-minute chart says stay puts, it's a little hard because the market's really not doing anything. Puts aren't doing anything, but calls aren't doing anything either. So the market's really not doing anything. This is the struggle we're having right now because the market is just, the VIX is in that spot where it's not really high, it's not really low, it's kind of medium. And so long and short charts don't really work, and medium charts don't help a lot either because they just simply, kind of go sideways as well. So in this chart, even though it looks like stay in puts all day, if you had stayed in puts from 11 to, let's say, 1 o'clock almost, it really wasn't going to do anything. Now, it did a little bit before 1. It did start coming back down again. You can see some more pinks. So you start to see the pinks, and then at 1 o'clock, it starts to come back up again. And then at 1, let's call it 1:30-ish, starts to go back down again. So we get these oscillations, and it's just hard to stay in a trade when you see this many opposite returns. We call them contra trades. So you see all of these contra trades. So what we prefer to see is like the 15-minute chart on a 5-minute chart or a 3-minute chart where it stays one color for a long period of time. But when they go back and forth like that, it just makes it very difficult to trade. This was last Monday. I also have a chart on last Tuesday. Now, last Tuesday's even worse. Again, same charts. It's a 15-minute chart on the left, and you can see that 15-minute chart did give me some pretty good ideas on which way to go. But one of the things I want you to see is look at some of the candles here. So even though we're supposed to be going in one direction versus the other, the candle wicks, and you see the candle body there, but then you see a wick coming out of each side of the candle. We call those wicks. Now that represents the high and the low of that particular candle. Now remember, this is a 15-minute candle, so each candle is 15 minutes. Now some of the candles are very small, but they have very long wicks. What that tells you is the stock went, or the market went up pretty high, but before the 15 minutes was over, it came right back down to basically where it started. So there was no real net change in the market. Some of them have long candle bodies and short wicks. We kind of prefer those. That means the market's been consistent during that period. What we don't like to see, though, is these long wicks. And you can see a lot of long wicks here. And even though you might have said, hey, I'm going to hold the puts right up until, say, 1, or let's call it 12:30-ish or so, 12:45, you're going to hold in the puts, you would have lost money on those because you'll notice some of those red candles in those wicks went all the way down to the 390, 340 level and then started coming up. Even though the market hasn't changed, the charts haven't changed, the market has basically come up. So you can see the wicks have kind of risen from there. So if you're not out of those puts by that point, by let's say a little after 11, I'm going to call it maybe 11:15 or so. But if you're still in puts or puts after 11:15, you're losing money. So again, you get all this volatility. Now look on the right-hand side. Now you can see that big move down from let's call it from 11 o'clock or so, right up until about 11:15, 11:20 or so. That showed up on the right-hand chart pretty well, and that was a good trade. And I think we did buy into that trade on Tuesday and made a little bit of money. But look what happened afterwards. There's no real direction. So again, with the VIX being where it's at, you don't really know whether to go calls or puts. The market is just, it's chaotic. According to the left-hand chart, we should have been in calls from somewhere right around 12, 12:30-ish or so. But if you look at the right-hand side, there might have been some movement in the market, very little though, over the next hour or so. In fact, it wasn't until really just before 2 that the market kind of went off in any one direction. But and right after that, came right back down and traded sideways again. So what's happening here is because of the VIX being in that middle territory, there's no clear indication of which way to go on the trade. And if you pick one, it's very easy to get on the wrong side of the trade. And then you have to try to figure out, do I hold it? Do I cover it? Do I strangle it? Do I double down? Any of the techniques, or do I just simply take the loss? So at the end of the day, it's getting harder to do things right now simply because the market doesn't have any real clear direction, because there's this fight about, is the Fed going to continue raising rates? And so many people say, yeah, the Fed's going to go to 7% on the Fed funds rate, and other people say, no, the Fed can't really go any higher because we've got a recession coming up and they're not going to keep raising rates into a recession. I think they're willing to raise rates into a recession. They clearly said it, but the market doesn't believe it historically, and they're right historically. Historically, the Fed has never raised rates into a recession. So it's unusual for them to say that they will. We've never actually seen anybody do that before. So I understand the market saying that they don't think the Fed will do that because it's just unusual to do. But at the end of the day, if we take the Fed at their word, which is hard to do sometimes, but if we take them at their word, they're going to continue to raise rates. That makes me think the market should probably have or be a little bit lower than where it's at right now. But it is what it is, and there's nowhere we can really go with this. We have to just base this on what we think is going to happen. Let's just do one more slide. I think it was the slide from this is actually 11/28, so I think that was Wednesday or Thursday. And again, on the left-hand side, on the 15-minute chart, looks pretty simple. Lots of small body or candle bodies with large wicks. We don't like to see that. That's the stuff that just drives us crazy. We like to see the big body candles with the smaller wicks. They're easy to predict. Our algorithms can kind of keep up with those a little bit better. But when you have these big wicks, it's hard to stay in a position. For example, you see some of those wicks where if you're on the downside, but you notice on the 15-minute chart where the charts kind of went to the different color. They went to blue and green. That means calls, by the way. So it did go calls, but if after you did that, you'll notice the first candle after that had a large wick to the downside. And again, you got to remember, you just came out of puts right there at I'm going to call it 12:10, maybe 12:15, but you just came out of puts, and then you get a big candle down. And the question is that candle going down, big time? Is it actually going to reverse back down? Is this going to continue going lower, or is the market really going to go back up? It just needs to bounce a little bit. And sometimes we call that a dead cat bounce. Does it need to do a dead cat bounce? And in this case, it did. You'll notice the candle after that. So we had that deep red wick, and then the next candle up was a good solid green body, but with a wick that was pretty high. Would have given you a chance to get in to take some profits. But the question is, or the problem is, sometimes you'll notice that red wick on that one just before it. So where they actually turned different colors, they're right around 12:10 or so. You got that big wick down, and it went down from, if you'd gotten into this position, you may have gotten in at 406.80 or so, maybe a little lower, could have been 406.40, but it went down to 405.40. You're down 50 cents. And again, on 1,000 contracts, you're down $50,000 at that moment. And the question is, when you get down to 50,000, you sit back and say, I got to take my losses here. I don't know if it's going to come back. It's not looking good right now because all you're seeing, because remember, at this moment, all you're seeing is that big red candle. You're not seeing the stuff that we see to the right. We didn't know it was going to come back. So that's what makes this hard. When you've got this decision to make that you're down 50 cents, do you take the $50,000 loss and be done with it, or do you double down and maybe buy some puts just in case it wants to keep going down, and then it turns around, and what can happen from there? And it happens frequently. We go ahead and buy puts to strangle the position, and then the market immediately goes right back up. And we would have been okay if we hadn't bought the puts, but we didn't know. We bought the puts because we needed protection. So we buy the protection. It turns out we didn't need the protection. Now we're going to cut the puts loose. You're going to take a loss on the puts, but now you're still 50, 60 cents down on the calls. So now you've lost on both sides of the trade, and you've got to wait for this thing to come back. And the question really becomes, is it going to come back enough to get me back out of, to cover the losses I had on the original position plus the losses I had on the put? And that's our problem right now, guys. So it's not uncommon for me to be up, let's say, $100,000 in the morning, and then, a trade that I do at 10:30 or 11 o'clock in the morning, I'm down 120,000. So I was up 100, I'm down 120, and then on a third trade, I can maybe come up back up 100 or 100. So the net position is all of that work, and all I made was maybe $80,000 or 80 cents. So at the end of the day, this is a struggle. We're struggling a little bit, and that's why you can see some of the gains that we've had over the last few weeks haven't been as good as some of the gains we had over the summer, where the VIX was very consistent in terms of being a high level or a low level. But and you can see the same chart, by the way. And again, these are the same charts or same day. The chart on the right, completely different. So you can see that there was almost nowhere to trade in the afternoon, right after, let's say, that downturn at 11 or 10:30 or so. Once you hit that low down there, you could ride the calls back up. But once you rode those calls back up, this was almost impossible to trade the rest of the day. Now you might look at that, by the way, and think, hey, I can do those pinks show up pretty well, but I've got this kind of smashed together. You can't see it real clear because I'm trying to do this in a side by side view. But if I were to, in a live view of the charts, I could actually spread those out. If I were to spread them out, you can't see it, but you can kind of get hints of it. There's lots of greens in there. So even though it looks like the pink was going down pretty steady, or then the green was coming up pretty well, in the middle of that, or in between there, there's a lot of contras in between. So it might go up 10 cents, come down 5 cents, go back up 5 more cents, come back down 10 cents, then go up 15 or 20 cents, and then come back down 2 cents. So it's just one of the things that's just back and forth, and it's that back and forth that wears you out. And when we get done trading, for the last 2 weeks, we get done trading and we're just exhausted simply because the market is just, it's so volatile right now with no clear direction on which way to go. And that fight, I think, is going to continue. I think it continues. Now, again, it kind of depends on what the Fed does. The Fed could surprise us. I don't think they will. I think Jerome Powell has made it clear that the next meeting on the 13th, 14th, they're going to do 50 basis points. So I think 50 basis points is kind of baked into the market. If they do more, that's going to tank the market, as I said. And if they do less, that could make the market go even higher. So I kind of wish they would do either more or less. It's the 50 basis points that kind of keeps us in this narrow range where the market can't really get any traction to go to the upside in any consistent manner, but it can't go to the downside either. If we could get them to do either 25 basis points or 75 basis points, in the next 10 days or so, that might change things and give us a better chance to start, picking up those trends and trades again. The VIX has come down. I didn't do a picture on the VIX, but the VIX has come down quite a bit. We're at a low for, I think it's been the low since about June of this year. So the VIX is pretty low right now. Again, we like a higher VIX rather than a lower VIX, but right now we're fighting charts just simply because of the VIX. So that's about all I've got for the week, guys. Remember, in coming up, we'll start doing this every Saturday instead of during the week. And then once a month, we'll be doing a live one where I do some training and help you guys learn how to do some basic things. So having said all of that, if you have any questions, remember, add or give me a call or an email, text, whatever it is. And other than that, we'll see you in a week or so. Have a good day, guys.